Hi everybody, this is the second video related to uh, this second video for lecture week 2 that I have shared last week. Okay, this remember the last week we stopped at when we discussed about three types of businesses in terms of ownership. So if we categorize businesses according to their ownership, then these businesses can be categorized into sole proprietorship, partnership, and companies or company. So I have explained about sole proprietorship and ownership and partnership, and this is the explanation about company. So let's see here. A company is organized under Malaysian Company Act 2016. The latest one is 2016. In this note, it is 1965. No, we have a new act for company in Malaysia. It is Malaysia Company Act 2016. Okay, remember this. The definition for company is a business owned by shareholders. A business owned by shareholders. Okay, a company is a separate legal and taxable entity. When we say it is a separate legal entity, it means that if you start a company business, the business is a legal entity. Legal entity means a business can sue somebody in court. Also, a business can be sued by others in court. So I think if you read business news, you will see something like this. Mr. A sue company C in court. Maybe Mr. A is a customer and he is not satisfied with the product or service provided by company C. So Mr. A can sue company C in court. So it means company is a legal entity. It can be sued in court. And also a company can sue individual and other companies in court. If you check business news, you can see something like this. Company C sue company B, for example. So it shows that a company is a legal entity. But if you start a sole proprietorship business or a partnership business, you cannot do that because a sole proprietorship and a partnership is not legal entity, are not legal entities. If you start a sole proprietorship or partnership, if somebody sue your business, it means that that person sue you as the owner of the business. The person cannot sue your business because your business, your sole proprietorship business and partnership business are not legal entity. Okay, you have to understand that. The second thing is a company also a taxable entity. Taxable entity means a company has to pay tax. If you start a company, then you have to pay company's tax. But if you start a sole proprietorship business or you start a partnership business, your business does not has to pay tax. Let's say but you as the owner of the person or the owner of the business has to pay personal income tax. For example, let's say in the future you start a laundry business, and then after 1 year your business makes profit $15,000. Your business does not have to pay tax, but you let's say you take the $15,000 profit. When you take the $15,000 profit, you, the owner of the business, has to pay income tax, personal income tax. Okay, that is how it works in Malaysia. I'm not sure about in China or other countries. So that is the thing that happened in Malaysia. Okay, so another thing you see here, another point in these notes: legal bodies to own assets, make credit, sign contract, suit and to be sued in court. Okay, like I said earlier, a company is a legal entity, so it can be sued in court and sue other people or other parties in court. At the same time, a company, when it is a legal entity, it can own assets. Company A can purchase building, company B can purchase building or motor vehicle or equipments using its own name. And also a company can borrow money from banks, can sign contracts. But if you start a sole proprietorship or partnership, as far as I know, when you want to purchase or you want to sign contract, you, the owner of the business, has to sign it using your own name. You cannot use your business name. That is as far as I know. But if you start a company, you can use the company name to when you sign an agreement or contract. Okay, and then the next point is set up for the purpose of increasing shareholder wealth. Like I said earlier, a company is a business owned by shareholders. I will explain more about that after this. So the purpose of starting a company is to increase the shareholders wealth. Okay. Okay. A company is a business owned by shareholders. If you start a company, people who the owner of the business will have shares in the company. So let's say you start a company and then you have 10 owners of the company business. So these owners will have shares in the business. Maybe each person has 10,000 shares or 1 million shares. So it depends on how much the owner contribute or invest in the starting up of the business. So a company can obtain large amount of capital or resources by selling shares. If you start a sole proprietorship or a partnership, there are no shares. You just invest or contribute and then you become the owner of the business. But if you start a company, you have to purchase the shares in the company, and then you will become the owner of the business. Maybe you have majority shareholding. Maybe you have a small shareholding. So it depends on the situation. Most of the time, companies are big businesses. Small business, a company is suitable for big businesses because most of the time companies are owned by many people, and also company can have large amount of capital invested by the shareholders. Another thing is, it is expensive to start a company. You have to pay for paperwork, registrations, etc. And also, a company also quite is expensive to manage. Every year you have to hire accountant, auditors, and then you have to follow many regulation and laws and regulations. That's why most of the time a small business is not suitable for if you want to start a small business, it is not suitable to make it a company. If you want to start a small business, you typically make it a sole proprietorship or partnership. Okay, a company is for big business. Okay. Okay, in Malaysia, basically there are two types of company. First, we call it public limited company. The second one is called private limited company. Okay, so these are the comparison between public listed company and private limited company. In Malaysia, public limited company, we call it syarikat berhad. Private limited company, we call it syarikat sendirian berhad. Now we have another one. We have I can't remember, but basically we have two types of companies. Okay, so let's see here. In terms of the difference between public limited company and private limited company. Okay, see here, in terms of members or shareholders. Okay, in Malaysia, if you want to start a public limited company, the minimum number of shareholder is 2, and you can have unlimited number of shareholders. For example, in Malaysia we have AirAsia. When they start AirAsia, when they start AirAsia, they can start AirAsia company with 2 shareholders only, but the number of shareholders is unlimited, can be unlimited. You can start with 2 or more, unlimited number. But for a private limited company, the number of shareholder is between 2 to 50 members or shareholders only. It cannot be more than 50 shareholders. So we can say that a public limited company is a big business compared to private limited company. Okay, number 2, the issuance of shares. Like I said earlier, a company is a business owned by shareholders. If you want to become an owner of a company, you have to purchase shares. So for public limited company, a public limited company, public or people are invited to buy the shares. A public listed company can sell their shares. A public listed company can sell its shares to the public, to everybody. For example, AirAsia Berhad. In Malaysia, they sell their shares to everybody. If you want to purchase AirAsia shares, you can go to Bursa Malaysia, and then you can you have to have an account first, and then you can purchase AirAsia shares. You can purchase also other public limited company shares, Malaysian public limited company shares, anytime. Bursa Malaysia is Malaysian stock exchange. And then, but if you start a private limited company, you cannot sell the company shares to the public. You are not allowed to do that. You can sell the shares of a private limited company to certain people only. Remember, the number is only 50%, so it's not open to the public. Okay, number 3. Remember this. A public limited company can be listed in Bursa Malaysia, can be listed in Malaysian Stocks Exchange. But a private limited company cannot be listed in Bursa Malaysia, cannot be listed in the stock exchange. So that's why public limited company shares can be bought or can be purchased anytime in the Malaysian Stock Exchange. Okay, number 4. In terms of financial information. So for a public limited company, the financial statement of the company has to be published to everybody. If you go to a public limited company like AirAsia or Malaysian Airlines or Petronas, you go to their website, you can search for their financial statement. In the financial statement, you can see how many profit they make during the latest financial year. You can see their assets, revenue, debts, etc. But if you for a private limited company, does not have to show their financial statement to people. They can make it confidential. Okay, number 5. In terms of management, public limited company, the shareholders typically hired group of professional management to run the business. In modern businesses, the owner of the business invested capital in the business or invested money in the business, and then they can hire other people to manage the business. Okay, so public limited company most of the time hired group of professional management or manager to run the business. But for private limited company, most of the time this type of companies run by the shareholders or hired professional management to run the business. Private limited company, like I said earlier, typically smaller than public limited companies. So most of the time they have only like maximum 50 shareholders. So most of the time this type of company is managed by the shareholder themselves. They own shares in the business, and at the same time they manage the business. Liability. Okay, in terms of liability, liability limited to the amount invested. Okay, for both public limited company and private limited company, the liability is limited to the amount invested. So it means something like this. Let's say you start a company. You start a private limited company. So when you start the private limited company, you have let's say 20%. So 20%, 20 shareholders. So each shareholder, let's say, invested $20,000. So the total is $20,000 times 20%, so $400,000 capital. So let's say after 1 year, the private limited company bankrupt or collapse, does not make any profit and collapse, stop, cannot continue operation. and the company has debt of $500,000. So limited liability means the creditor or the bank or the lender can claim, can take the amount invested by the shareholder in the company only. The bank or the lender or the creditor cannot take the personal asset of the shareholder. Okay, that is limited liability. Let's say you invested $20,000 in the business, and the business lost. A bank can take the $20,000 that you have invested only. Bank cannot take your personal car, personal cash, personal land or building, or house. No, bank can take the amount that you have invested in the business only. That's what we call limited liability. But if you start a sole proprietorship or partnership, let's say your business has loan $50,000. After 1 year, the business collapse. The bank can take the business asset, and also if the business asset is not enough, the bank can take the personal asset of the owner of sole proprietorship and partnership. So that situation is called unlimited liability, but company is limited liability. Examples. Okay, number 7, examples. So public limited company are big businesses, and they are businesses that are listed in the stock exchange in Malaysia. So the example of companies in Malaysia is Telekom Berhad, Tenaga Nasional Berhad, Petronas Berhad. In China, the example of public limited company, I think, is Alibaba. Another one, there are many more. In US, the example is Microsoft, Apple. Okay, these companies are public limited company. They are owned by many shareholders. Okay. And private limited company, like I said earlier, most of the time is smaller compared to public limited company. So in Malaysia, we have Naza, Kia, Sdn Berhad, Adabi, Sdn Berhad, I think. So I hope you are clear now. You understand 3 types of businesses in terms of ownership. So okay. Now, the first category of businesses that we have discussed is in terms of sector or industry. Like you have seen in the previous video, there are many companies out there. These companies can be categorized as service business, or merchandising business, or manufacturing business. And then you have now you have seen the second type of category. If we look at businesses in terms of ownership, they can be categorized as sole proprietorship, partnership, and company. So in sole proprietorship business is simple. Partnership business is a bit complex, but companies are very complex. Companies are typically big businesses, and they have many transactions. They have they have to follow many law and regulations, so they are very complex. So in this course, you have to learn how to do accounting record for sole proprietorship service business only. Very simple. Sole proprietorship is simple. Service business is also a simple business. This kind of business, the example of this kind of business is like a laundry shop, tailor shop, catering business, small restaurant, Okay, these are the examples of sole proprietorship service business. Okay, this is the end of the lecture. Do not forget to write your name and matric number in the comment section.